Today we stand at a crossroads of the unknown, where the ancient yellow metal of kings meets the high-speed fiber optics of Wall Street. But here we are again trying to make sense of it all. It's been a week where the world held its breath and then slowly exhaled. On this Friday, April 24th, 2026, just yesterday, the S&P 500 is trading near all-time highs, a recovery so fast that it has left even seasoned veterans of the floor scratching their heads. More on that in a moment. According to JP Morgan Global Research, the S&P 500 completed a full recovery from its conflict-driven drawdown just 11 days into the trading session. While the naval blockade in the Middle East remains, investors are no longer selling first and asking questions later. Instead, according to a Bloomberg Finance report, they're anchoring their hopes on a durable V-shaped rebound that has seen the Nasdaq 100 post its longest winning streak in over a decade. And now for a little bit more. While the stock market was doing its celebratory dance, the quiet markets of gold and silver were sending a little bit of a different signal, as I'm sure you are aware. According to Discovery Alert, gold has been navigating quite a complex path, currently trading at the mid 4,000 per ounce mark, and that of course is down from the January highs that we have seen. We'll see all of this on a chart later, and we'll also see a chart about the US dollar where there's an avenue where these numbers make a little bit more sense. Of course, according to precious metal experts like goldsilver.com, the underlying story for silver is one of a structural deficit. We're now in 6 consecutive years where the world is using more silver than it mines. You know this. 762 million ounces were drawn from the dirt since 2021. And with the Bank of America's metal research suggesting silver could eventually see a ceiling as high as $309 an ounce, this poor man's gold is starting to look once again like a very rich man's asset, but time will tell on that. And why is there such a tug of war? Why are the stocks up and gold holding ground at the same time? Well, let's make a little bit of sense of that. According to U.S. Bank, it's a tale of $2. The U.S. dollar index currently stands at a one-week high of 98.5. Normally, a strong dollar is a hammer that beats down the price of gold, but according to CME FedWatch data, the market is looking towards the April 29th FOMC meeting with a 99.5% certainty that rates will hold steady. The strength of the dollar right now isn't necessarily because of our own fiscal health. According to Congressional Budget Office, our annual interest payments on the national debt have now officially crossed the $1 trillion mark, as we have reported on. But no, the dollar is strong because, as Deloitte's Insight points out, the rest of the world is facing even deeper chills, so it's a comparative strength. Europe is grappling with a natural gas shortage, and Japan is struggling with a yen that won't wake up. We are seeing a world that is flight to quality in most directions. According to JP Morgan, investors are buying American stocks because they believe in AI and corporate resilience, but they are buying gold because they are looking at the $35 trillion debt clock and wondering, when will the music stop? It's a market climbing a wall of worry that's taller than even before. But as the Strait of Hormuz shows signs of an exit ramp for tensions, and as a new Federal Reserve chair prepares to take the seat in May, the American investor is betting that the engine of innovation is still stronger than the weight of debt. But you can be the judge of that. So the headline says conflict, the ticker says growth, and the bank vaults full of precious metals says, I'll just be right over here just in case. So there you have a little bit of news, a little bit of idea on what's going on the macro scale within everything. Let's take a look at these markets and see firsthand as we try to make sense of this crazy, crazy world that we live in, folks. Can't write a script like this. This is that V economy that they're talking about. Look at that beauty right there. Of course, we know it had tanked for a while, and now it is back to where it has been, almost in a perfect V. We do have the Dow Jones here, 49230. It's down almost 80 points. And we see here that February, 2 months ago, was the all-time high. We're looking for 50,000, and we're not far off, as you can see. There's the 49 mark. There's the 50,000 right there. So a little bit to go, but it's still doing everything you would want given the situation from an economic standpoint. S&P 500 is next, 7165, up 56 points. Of course, that means we're up 0.80, and we had an all-time high yesterday on the 24th. Take a look at that. Beautiful moment there. As you can see, another V and an all-time high. Last week was an all-time high as well. NASDAQ Composite 24836, up almost 400 points. That's well over 1%. Once again, all-time high was yesterday, 2 weeks straight of an all-time high. There it is there. It's a beautiful thing, folks. And we talked about the Forex race, which is going to be the US dollar versus the euro and, of course, the yen, Japanese yen. And as we talked about, the yen cannot seem to find its footing this year. The US dollar, however, is trending to be in a decent spot and pretty close to where the euro is, which is a place we have not seen in a long time. And I do think that that is playing a major factor in what the precious metals markets are doing. The dollar being decently strong in a time of inflation, a time of good markets, as well as obviously conflict going on. Internationally, it's mixed markets overall. Nothing crazy happening until we get over here to Chile, who was up almost 1.5%. We have Mexico here sitting at 0.88. We have a handful down in Europe. The EMEA, which is Europe, Middle East, and Africa, they're going to be down a half percentage point. Belgium down a full percentage point just about. Denmark up right there, 1.32, still down on the year, negative 8%. France down 0.84%. We have Israel down 1.29%. Italy down a half percent there. Netherlands up 0.64%. We have Spain down a full percent. Sweden down just about a full percent. Sweden a little over a half percent. Turkey up a half percent. The UK and, well, both UK markets down well over a half percent. India down 1.29. They're at negative 10% on the year, folks. So I'm not sure exactly what's going on in India, but I know that there's been a lot of trade issues happening. Japan is up almost a full percent. They're at 18% growth on the year. That's crazy. Taiwan up 3.23%. The year-to-date percent change for them is 34%. Pretty crazy there. So that is what we have in the markets. What about your metals? It's the reason you come, right? We're going to go look at those metals right now and see how they fared. Looks like silver spot ended yesterday, $76.44, and that is down on the week, $3.92, and that is almost 5% down, 4.88% on the week. That is not the best week for silver, unless, of course, you're like me and you're wanting to buy a little bit, which I will be doing. Year to date, we're still up on silver, 5.67%. We've gained $4 so far this year per ounce. So the story is not all bad there. Gold is sitting at $4,724 an ounce. We're negative $77 an ounce, and that is 1.62% for this week. Year to date being in the positive 9%. That's right, we're still 9% since January in gains, almost $400. So that's a really good sign. So that tells us that gold still is winning the week and the year. They took the lead back last week. It was silver that was winning the week and the year as they had gone back up to the 80s. But now they sit back in second place. So gold is still winning. Silver not too far behind when it's year to date. That being said, that's what we have today. If you'd like to support this channel and our efforts, there's many great ways to do so. The easiest one is to just watch the videos, like them, share them, so that they can get pushed on to others. Obviously, if you're one that wants to buy gold and silver like I do, or maybe copper, palladium, platinum, APMEX is a great place to do it. It's a place that I look to all the time. I have a link right here that is a affiliate link, and they will give me just a small reward for sending you their direction, or maybe consider being a channel member, which is just a fantastic way to show your support. That is all we have for you today. Thank you so much for watching, and as always, please remember to stay classy and current with the culture of currency.